Is U.S. exceptionalism in question? And, you know, that's been the question for a while now, and actually for a few weeks. And, you know, we've talked about that since the beginning of the year. What we're seeing is we're seeing U.S. equity markets really underperform other indices around the world, whether you're talking about China, whether you're talking about Europe. But also, we've seen the dollar really weaken against many other currencies as well. Well, that's going to be put to the test this week, early in the next week, as we have Europe, UK, and US PMIs coming out. So guys, my name is Blake Morrow. You are listening to the Week Ahead video for March 23rd, 2025. I hope you guys are having a great, weekend now that you're watching this. As you can see, we're filming on a Friday, or I'm filming on a Friday. I hope you're having a great week in trading, and next week is going to be another doozy week. Not only do we have PMI data that's coming out, we also have some CPI data from different countries. We also are quickly approaching that tariff, the tariff news at the beginning of this next month in April. And then also we have the important PCE at the very end of the week. So make sure you all stick around. We've got a lot to cover. We're not only going to cover what's happening in the currency market, how currencies may react to all this macroeconomic data, but we're also going to be taking a look at the stock market. We have Nick from Trading Analytix. He's going to be taking a look at the indices, some individual stocks, and then I'm also going to cover gold, crude, what's happening in the bond market, and then I'm going to give you my top 3 setups for this next week. We're going to review the top 3 setups from last week. So we've got a lot to talk about, so let's get started. All right, so I'm going to start off with, we're obviously in the ForexAnalytix system right now, and we're going to, take a look at the data and the data that's coming out. You can actually see it all right here. If you look to the right of the live squawk feed, you can go over to the calendar and scroll through and find out, the data that we're covering and what I'm covering. But I'm going to just kind of get you through the news and show you what's really important. We're going to start off with really Monday, and I'm actually going to just start with the euro dollar. Now, when you click on an individual instrument here, you notice we cover 30 different instruments, not just currencies. We have like the German DAX, the 10-year, Boons, Ethereum, Bitcoin, obviously. You can see the S&P, crude oil. So it's not just currencies. It's kind of a broad scope in the market. And we have different type of analysis types, whether you're talking about Elliott wave, harmonic, basic technical analysis, live charts, and so on and so forth. But I'm actually going to spend just a little bit of time talking about these individual stocks. We also have our charts that we follow on TradingView that I always draw only here on the week ahead video. So you know that when I make a tweak to these charts, you're going to see the same tweaks the following week, because I have different charts that I use for the morning edge and our face show, our live shows. You can see the charts they look a little bit different. Those are the ones I upload actually on the ForexAnalytix platform when I'm uploading analysis as well. So, but I go back to the week ahead video because I like you guys to see what was I talking about last week at this point in time and what it looks like now, based on what we saw last week. So we're going to start off, and let's start with the euro dollar, just because we have Eurozone, UK, and US PMIs first thing on Monday. And this is the whole US exceptionalism story. Now, one of the unique things about the euro is we've had this massive move higher towards 109. If you go back several weeks when we start breaking out because of this German data, I've said for the last several weeks, not only on our live shows, but on this show as well, on the week ahead video, that, once we get around the 109 level, you're going to start to see two-way price action. I think that is going to be the case between now and really 111. 111, as you all know, is this long-term weekly trend line. You can see it right here. It's in blue. And that's going to be major resistance moving forward. Matter of fact, if you look at it like this is actually trendline support, which would be a triangle support. So we're in a big weekly triangle. You guys can see that clearly. I think the upper end of that triangle is going to eventually be tested. Is it this week or not? I don't know. But I do have one of the trade setups for this next week has to do with the euro. What I will say is you notice the relative strength is starting to work off overbought. So we are going to find some sort of neutral zone pretty soon. I think euro dips are still being bought overall from a positioning standpoint and from a macro standpoint, the analogy you could use about us as traders and big money in the markets, they're like think about a cruise ship, right? So if you're a cruise ship, you're the big money guys or gals. You manage billions and billions and millions of dollars. You're a big cruise ship. You know what we are? We're basically like those little wave runners cruising around or a school of fish cruising around a big ship. As the ship turns, we turn with it. And as we turn with it, we're just scalping, trying to make a little bit of money here and there. Well, the big turn is happening right now in the euro. We're starting to see real money accounts really buy euros. And that means that overall, they're selling dollars. Now, that's been a big tectonic shift that we haven't seen in years because overall, they've been dollar buyers. But now we're starting to see euro buyers or dollar sellers. So with that being said, that means these dips are going to be fairly shallow. So I'll be looking for dips to buy in the euro. I will get a little bit more granular with our analysis because when you're looking at it like this, there's so many people that call this a double top. And I'm just going to give you a quick analysis on something that we talked about this morning before it even happened. When I say this morning, I'm talking about traders that were on the Morning Edge and the F.A.C.E show. You guys, these are private shows for ForexAnalytix. If you are a ForexAnalytix subscriber, you can see right on our webinars we have the Morning Edge private show, daily roundup. The F.A.C.E show and our Flow show are public shows. You guys can all listen to them, whether or not you're a subscriber. But if you want to listen to the recordings, you just go up here to notifications and you can listen to the recording right there. For today's Morning Edge was uploaded 2 hours ago, which I did it about 4 hours ago. So anyway, I want to talk to you guys about this because everybody's trying to call a double top. There's a double top in the euro. No, what there is you've seen some highs in the euro. It's pulling back a little bit, but this double top that you might be seeing or these highs, I don't think it's going to follow through because what's going to happen is there are too many buyers on dips now. So if you look at what that would forecast for a double top reversal, it would take us below 107. Doubtful we're even going to get close. Matter of fact, let me delete some of this stuff. And what you'll see here is you're going to see two things. You take this low to this high, and the 38% retracement comes in at 107.25, right there, 27. And then take a look at this. If you go from this high to low, to high, dang it, that's not what I want to draw. I drew the wrong thing. Low to high, right? You have 161% extension that comes in just below or just above that, I want to do that a little differently. Comes in right around 107.47. So these are the levels where you want to be on the long side of the euro. Why do I think if we get down there, why do I think it'll actually dip and reverse? Because you're going to get everybody trying to short it, and then it's going to rip back in their faces and squeeze everybody because the ship is turning. The cruise liner is turning. You don't want to be stuck as it's turning. Does that make sense? I hope it makes sense. So in other words, yeah, do I see it dipping like this? Sure. Do I see it going straight up like that? Absolutely. Do I see it falling and completing this, oops, I didn't mean to do that. Do I see it completing this double top? No, I don't. I'll be buying it on a dip, and I think you should probably be thinking about that too. Anyway, that was way more information than I wanted to give you today, but hey, what the hell? It's Friday, and I like all of you. Almost all of you. You know who I'm talking to. All right. Hey, moving right along, we have UK PMIs as well. You know, we've seen the sterling actually move a little bit lower from this channel. This is the channel we've been following all week. If you guys are not, again, I'll just do it this way. If you go to ForexAnalytix, you look at sterling, you'll see the channel we've been following all week. You see it right here. Right? And we broke below it, right? So it's allowed a little bit of a pullback in sterling. Now, we did get past the Bank of England this week. The votes suggested that the sterling should be a lot higher, but it didn't go higher. And that's probably because next week, on Wednesday, we have the UK CPI, but also we have the annual budget. And that is going to be a risk for bulls. So what's interesting is the Bank of England should have spiked that sterling all the way back above 130. Because it didn't happen, I would be concerned. So I still think that this is entirely possible over the course of the next few trading days. We might actually see the sterling pull back and bounce off of channel support with all this data coming out. Now, we also have the US PMIs. I do want to take you into the dollar index, but I'm going to do it when we get to Friday on the PCE, not calendar Friday, when I get to that event in a couple of minutes. So stick around for the dollar index. Now, we also have Mexican inflation. Now, I will do a pretty thorough review of the dollar Mexican peso, because this is one of our setups from last week. I was looking for it as a short. As you can see, it didn't work out. But if you were in our community, you might have been on the short side 3 different times and made money 3 different times. So I'll explain that in a little bit greater detail. One thing I do want to talk about the dollar Mexican peso, though, is notice where we've stopped. You take this high, you take this low, and what you'll notice is we have gone, where did my template go? Oh, it's right there. Sorry, just looked at something different. You'll notice we stopped ahead of the 38% retracement. I actually shorted the dollar Mex here, and I shorted it here. Now, if you want to know where I'm shorting the dollar Mexican peso, all you have to do is go into the trades room, and you can say, Blake shorted the dollar Mexican peso right here. This is a couple hours ago. This is at 7:03 a.m. It's 10:58 a.m. So that was approximately 5 hours ago. So 5 hours ago, you guys can go look at your time, what that is for you. For me, a Pacific time zone, that was a 7:03, so it would be 10:03 Eastern. Go look at what the dollar Mexican peso was trading at 10:03 Eastern. It was 2026. It's actually 20.2650, if I remember correctly. Actually, it was 20.26.468, which is basically 2650. And approximately an hour and change later, I got out for 782 pips. And you can see it right there. Now, if you want to know the trades that I'm in, all you have to do is go to the trades room. The trades room is located in the ForexAnalytix chat room. This is the general chat room. You can get in the trades room. You can get in the S&P room. You can get into the smart persons room, which is the Flowonomics room, which is the macro chat room. I say smart people room. I'm not there. I'm just in the general chat room. No, I jump into all of them. But the guys that really like to dig into what's happening in the markets, they happen to be in the macro chat room. But you know, this is all available to you when you're in the ForexAnalytix community. Again, now I'm talking about the dollar Mexican peso. We actually have Mexican inflation coming in on Monday. So watch the dollar Mexican peso as we're probing this 38% retracement. Like I said, I'm going to come back to it a little bit later. Tuesday night, we have Australian CPI, which is actually Wednesday morning. We need to be following the Aussie, because the Aussie looked like we were going to break out, and frankly, it failed. And given the fact that equity markets are so weak and the Aussie dollar looks weak, I'd be focused more at this point in time at what happens. Let's get rid of this. On what happens with this pullback and how far we can pull back. You can see right here. Let me go ahead and draw it out for you. This is, you'll see it right there. This is the 618 retracement, right? And that comes in around 62 cents, which is approximately, I would say, channel support if we're going to forge out channel support. So in other words, there's a risk that the Aussie does slip to about 62 cents before bouncing. Now, remember, we have Aussie CPI on Wednesday morning in Australia, so could that be a catalyst that drives it down there? Entirely possible. Wednesday, like I mentioned, we have the UK CPI. We also have annual budget out of the UK. We have US durable goods orders. That's going to be watched fairly carefully, but Friday is the more important data in the US. Thursday, we have Norway's inflation rate. Now, if you guys haven't seen the US dollar Norwegian krona, I'm going to tell you this is probably a great case study in what happens in a descending downtrend, a severe downtrend, when it works off oversold conditions. Because what we have been doing over the course of the last couple of days has been working off these oversold conditions in relative strength in the US dollar Norwegian krona. Now, I haven't looked at it here for a while, but you can see We were looking for it to move lower. That's why it's drawn like that, because we were looking for it to drop. Well, it dropped. We are at the 88% retracement, but I want to show you something even more important regarding the US dollar Norwegian krona. Okay, if you take these lows, which perfectly illustrated the descent, the ascending trend line right here, you'll notice that we're really stalling on what I would say is key support. Now, if the euro dollar breaks above 110, which I do believe it's going to eventually do, the US dollar Norwegian krona may be leading the way, especially following the rate decision. They are expected to keep rates unchanged, the Norwegian Central Bank, but if they're a little bit more hawkish because inflationary pressures are present, we could see that US dollar Norwegian krona really slip through this major trendline support and 88% retracement. Thursday's U.S. final GDP, I don't think that's going to be much of a mover. Unemployment claims haven't moved the needle much, but we haven't seen them move much. On Friday, we have Norwegian jobs, which you're looking at the U.S. dollar Norwegian krona. We have Mexican unemployment. We have UK retail sales, Canadian GDP, which, by the way, just to give you a quick reference on what the dollar CAD is doing, we've been looking at this this triangle, and guess what? It's still a triangle. Do I think the outdated Canadian GDP on Friday is going to move the dollar Canadian? Unless it is a complete blowout or breakout. Blowout to the upside, blowout to the upside, breakout to the upside. If it's a blowout number to the upside, or it's a really crappy number to the downside, I doubt it's going to move the needle much, but I believe the following week, as we talk about tariffs, April 1st and 2nd, that's going to be what breaks us out of this triangle. Now, the last thing I want to talk to you about as far as economic data is concerned is the US PCE. It is the Fed's favorite inflation gauge. And let's just take a look at the dollar index. Now, the dollar index, as you all know, this is the one chart that is used by not only myself on this video, but we use this chart for our daily analysis, everything else. So that's the reason why it's here, and I think that and it's kind of messy, and you always see it updated. It's just because we use it to update our analysis on the dollar index. Here you'll see it. You can see the dollar index. This is the exact same chart that you just saw, right? I use this chart universally for pretty much everything. As much as Ryan Littlestone, if you're listening in, Ryan, he doesn't like the dollar index. I happen to like the dollar index. That's why we look at it. Now, we have that PCE data coming in on Friday. You'll notice that the dollar is flirting with a possible recovery, but look at what relative strength has done. Relative strength has worked off oversold conditions, and we're already getting into a neutral area. So what does that mean? Well, that means if by next week the US PCE comes in weaker than expected, we could actually see some downside pressure. Now, I'm still in the camp that the dollar is moving lower. Now, the question that we're going to get this next week is, do we move higher first before lower, or do we just break down? Because this is just a tight consolidation in a very bearish trend. Very impulsive move, and pullbacks have been minor. It's very similar to the U.S. equity markets. Again, when you talk about U.S. exceptionalism and it's waning, you can see it waning in the dollar. You can see it waning in equities. So it's a universal theme that we've been talking about. And since the beginning of the year, when we were talking about what could happen in 2025, one of my big, you can call it a prediction if you want, but I did it on the trade-off show with Pepperstone. We talked about it here on the week ahead videos. I just think that the U.S. Economy is going to start to weaken when other economies are going to do better. And that's pretty much what we're seeing now, and it's really coming into fruition. But you're seeing it in U.S. assets, whether you're talking about the bond market, whether you're talking about equities, whether you're talking about the dollar. You're seeing that really come to life right now. So keep your eye on the dollar index. A break below 103.20 would be devastating for dollar bulls, because we've had an aggressive move lower and we failed to rally thus far. What I'm hoping is going to happen is we see the dollar recover towards the 200 DMA, and then from the 200 DMA, we can look for fresh shorts as relative strength continues to work off oversold conditions. That would mean we get somewhere near 105. Do I think that's going to happen? I don't know. I'm doubting it as days go on, the longer we sit down at these levels. All right. Now, I know you want to see other markets, and I'm going to show you other markets. Matter of fact, I'm going to show you what's happening in the S&P. I'm going to show you what's happening in gold. I'm going to show you even what's happening in copper this week, because copper has been on an absolute tear. But before I do that, I do want to talk about the volatility that we're seeing, because we are seeing a massive amount of volatility. Now, if you're accustomed to using the VIX, and you're like, well, in the VIX, we've actually been coming down. Yes, we are stabilizing, but look at where we're stabilizing at. From a low level over the last couple of years, we're stabilizing at higher levels. Now, higher volatility, especially when you're above 15, that you could say 12 to 15, somewhere in that neighborhood. When you're up in those levels, that means we're getting a lot of whipping around every single day. So the best way to take advantage of this is through the trader funding program. If you don't have a lot of capital to trade, or you want more capital to trade, check out the trader funding program. There's two options for you. Okay. The first option is with a one-step assessment. This is going to be your more inexpensive option. But if you think you can make 10%, right? But you cannot, but you can make 10%, but you can not lose more than 6%. You can make 10% before you can lose 6% on a trailing drawdown basis. Then check out the Trader Funding Program one-step assessment. You can access up to $1 million in $1 million account. Now, with that, you also get included the ForexAnalytix community, platform, mobile app, that type of thing. So you can chat with me all day, and you can chat with other traders and have a community where you can bounce ideas off of. What a great opportunity that would be. Now, you have a max drawdown intraday of 5%. You should never lose more than 5% intraday. But that's just the rules of the one-step assessment. If you want to skip that and you want to go directly into a live trading account, then you can go to the immediate live trading accounts. These are new. Now, you can access up to $100,000 in currency, so you can see the different plans that are available to you. Now, for the Trader Funding Program, the one-step assessment, we do have a 30% off assessments. I think it's till the end of this month. That means to the end of the week when you're watching this video. Take advantage of that, because we don't have sales on these all the time. There is no sale in the immediate live account. Those are brand new, and the desire for those are so great, and it's new, that we won't have discounts on those for a while. But it's a really great opportunity for those of you that just want to skip over the one-step assessment. The more inexpensive way to go and to access large amounts of capital, the one-step assessment plan is the way to go. Anyway, check out the Trader Funding Program. Watch this video right here. It tells you all about it. But more importantly, when you're actually going through these assessments with Trader Funding Program, if you were here for the very first time, you also get a one-on-one session with me. So check your emails, check your spam or junk, just in case you might have missed it. But when you're new, you get a one-on-one session with me. I'll take 45 minutes, talk you through what to expect. Also explain to you what the tools that you get with the one-step assessment. And then also I'll give you some tips on how I've passed assessments in the past. So it's a great place to start. Okay, let's go back to what we're talking about as far as what's happening this next week. Let's talk about what's going to be happening in the S&P and the other markets. Now, before I give you my view, I'm going to let Nick from Trading Analytix give you his view. So stand by. Here comes Nick. Make sure you give him a thumbs up after you're done. All right.
everybody. This is Nick Groves. Blake, thank you again, as always, for passing it over to me. Another wild week that I'm excited to talk with you all about. So we'll go ahead and dive right into it. I'm going to talk about the S&P, the NASDAQ, Amazon, Tesla, and maybe NVIDIA if we have time. But what crazy formations we're seeing right now? We're seeing a nice bear flag here in the NASDAQ. And then also, if you take a look at the S&P, we have a bear pennant. And both of those point much lower. If you take a look at the S&P, this triggered today as it broke down. That would point the S&P back near 5,100. So the way you measure that is you take the flag, oops, not the fibs, you take the flag and bring it down somewhere near 5,100, which is quite the drop, right? And if you take a look at the NASDAQ, it also points us back near, I want to say around 17,100 or so, 17,200. So those are some serious drops. In the event that happens, we're talking pretty much a bear market year, 23%. I will mention we did trigger some other stats that suggest that we will have that. But we've had a record amount of selling. Take a look at this. One of the most extreme oversold signals in history turned up on Friday. And while that is typically a good buying opportunity, you can see instances where, yes, we got that reading, but it wasn't actually the low. We got that reading, but it wasn't actually the low. Could we be in an environment where we actually do get another low despite all of this, extreme oversoldness, if that's the correct word? I think it's possible for sure. We've broken the 200-day moving average. If you look at the S&P, we challenged the 50% retracement from the April lows to highs. That seeing the buyers not step in right now is definitely worrisome, right? And this has us wondering, will we actually come down and continue to break? Key support now is definitely going to be around that 5,500 level. I'd say the next level is around 5,400. If you take a look at the options placement, you will notice 5,400 is a large level. That could be where we're heading before we actually find some stability in this market. But what I will point out as well, and now we'll talk a little bit about the bulls. Seasonality, the second week of March is historically a pretty solid time to buy. It is typically the low within the market. And, I showed you guys this stat the other week. S&P 500 after 6 consecutive plus or minus days. The week later is kind of a mixed bag. And the week prior to this week, we printed red. So this stat rang red, and that means that the next few weeks should be red as well. So that has me eyeing lower levels like 5,400, 5,100 could be a stretch. The reason why I think it could be a stretch is when you look at how often these corrections actually happen, 10% corrections come every 290 days or so, okay, and that's on average. The last 10% correction we had was in October of 2023. We were definitely due. But to expect another 10% decline in like the next week or so obviously gets pretty tough when you start thinking about how likely that could actually be. So we are seeing this bear pennant in the S&P, bear flag in the NASDAQ. But let's take a look at how we're developing, because as much as I love technical analysis, there's a chance that I end up drawing things like this, create a channel up into highs. So let's say that maybe we are in a channel and it's going to look more like this before we actually go down. I'm looking for somewhere in between 57.50 and 58.50. I would really like to see this market back test the breakdowns that we just saw. And after then, maybe we can roll over. That's kind of the thinking that I'm having at the moment. If you look at how we've been acting intraday, yes, the market has pulled back a bit today, but it is trying to hold roughly around that 50% retracement. So it's still holding some of these decent levels, and as much as I loved how this setup looked and started thinking, 5,100, that sounds like a juicy way for me to make some money, these things can change, right? So we just have to always stay on our toes. So as far as resistance goes in the S&P, 57.50, that 38.2, which I would say is common after a large move like this to at least retest the 38.2. But I love how the market loves to mess with people, so it might squeeze up a little bit higher. That's why I'm really targeting around 58.30 to come up with a new plan. Do I want to get short? Do I want to press long? We'll have to see. We've certainly had some moves in the dollar and rates. I'll leave that to Blake. But let's go and talk a little bit about big tech. So taking a look at Amazon here. Amazon is trying to find footing as it's sat in this descending channel. Now, we just saw some descending channels break in the S&P and the NASDAQ. Will Amazon follow suit? It's possible. I will point out, too, that from a larger standpoint, when you take a look at Amazon, when you're looking at the lows, if my chart would just load for me, if you're looking at the lows from October of 2023, our last 10% correction, we've pulled back to the 38.2, which is the continuation fib. Now, it did just have a false breakout of this nice wedge, which does infer a breakdown. So if it's going to continue, 181 is going to be key support. But I would not be surprised to see some kind of pop back near the 38.2, call it around 209, 200. Somewhere between 200 and 210, there should be solid resistance in Amazon in the event you're trading it. Now let's talk about Tesla. Tesla is getting interesting. It pulled back to the 786. I thought it was going to find support closer to the 618 here between 275 and trendline support. This dates back to July of 2023. So that 250 to 260 level is very big, or at least was big support. Now it's going to be big resistance to the upside. You'll notice intraday breaking out of this triangle here. It broke out from 237. It's getting ready to bang its head up on 250 for the third time now. So if it breaks, yeah, I wouldn't be surprised to see Tesla pop up just a little bit. Maybe back up towards 280. A really aggressive pop would be 317, 320. But Tesla's down quite a bit. I mean, if you take a look at it on the year, it's down over 40%. So, it's already in a bear market. So that whole that shift that we've had of we're in a bull market, we got to, continue to buy dips, that might be getting to shift. The Russell's not far from being in a bear market. The NASDAQ and the S&P, if these bear flags play out, they will also be in a bear market. So we've been accustomed to a lot of this buy the dip, but we have to be careful now as we navigate this market. Now, taking a look at NVIDIA really quick, it's trying to play out this inverse head and shoulders pattern. I don't love the symmetry on it, but basically key resistance is going to come in at 121, key supports at 114. If that breaks, maybe it'll try and come down and fill this little gap here at 111. Below there, 105 is very massive support. I'll also point out really quickly, because I got to give this back to Blake, Apple is in a bit of a bear flag as well, okay, kind of mirroring the NASDAQ. It did have a false breakdown, so maybe we end up getting a further pop, but I just wanted you guys to see that development. And also from a longer term viewpoint, Apple has pulled back to the 38.2 from the lows of 2023. Okay, so this is a massive level here at 207. Below there, you do have some former resistance, now support at 200. So hope that helps you guys out with a little bit of the big tech scope and then equities. I'm going to pass it on back to Blake. Have a great weekend, everybody, and we'll talk soon. Cheers.
Well, thanks, Nick, for your analysis of all those different markets and some of those individual stocks. I know you always do a great job. Even though I haven't seen the video yet, I'll be watching it in post-production. But I'm going to take some time right now, and I'm going to cover what I want to cover, which would be, first of all, the S&P. So, we've discussed this last week about the S&P about hitting resistance and rolling over. Well, guess what? That's exactly what happened. We talked about, look at the drawings from last week. You can go back and listen to last week's video if you want to. We were looking for a reversal, RSI to work off oversold and roll over. I believe that is what's happening right now. Do you guys see it? Do you guys see this? It's exactly what's happening right now. But what we're developing, which is scary, guys, this is what you would call a bear flag pattern. A bear flag, I'm actually looking at it like a pennant, but it's a flag, pennant, whatever you want to look at. It's looking like that. Why is that so scary? Well, it's scary because if you think about what the potential is for this type of move, it basically takes us not tomorrow, not the next day, not next week. Well, it could be next week. I mean, hell, who knows? But it takes us all the way down to 5,100. Now, why is that such a big deal? Well, if you look longer term, let's go over to a weekly chart here and let's do this. What you'll notice is this is a long-term channel that we've been possibly trading in. Hold on, let me fix that. It'll look something like this. All right. Look, something like this would be channel support around the 200 DM. Well, this is not 200 DMA. 200 DMA is a lot. We're under it right now, but you can see it'd be long-term channel support should we get down there, which would also coincide with this breakout point by the time we get there. Now, if you think about that, that's like 5,100, 5,000, 4,800. I mean, from the highs, if this flag pattern does play out, that is an no, I guess it's not quite a 20% correction. It's an 18% correction, which is almost bear market territory. Almost, but not even. So, what I'm illustrating to you is if this market continues to sell off, we have further to go, and we wouldn't even be in a bear market should it complete. But there's a lot of distance to travel to get there. All right. So the way I'm viewing the S&P right now, bear flag pattern, bearish pennant, however you want to view it. But if we start clearing below 5,500, this would be extremely bearish for the S&P. Okay, moving along, though, I want to talk about some other markets. I want to talk a little bit about copper. I mentioned to you guys I wanted to show you copper. Copper has been on an absolute tear. And, the scary thing is what happens if copper breaks out? When you have higher inflation with slower growth, higher inflation can come in the form of, higher prices. Some of the things that could stoke higher inflation could be higher commodity prices, which means higher prices to make things, and copper could, and commodities tend to go higher. Commodity prices could continue to go higher and stocks go lower. And economic growth slows, which is basically global stagflation. If you think about it, if there's higher inflation but slower growth globally, you have a stagflationary type of environment, and that's what the FOMC kind of alluded to this week. If that is truly the case, I don't see why copper can't continue to break out. And if we break out above this resistance right here at 522, we could be up at 550 in no time. And that would be extremely bullish for copper. I do want to talk a little bit about gold, because gold finally, now we got really close to that. We got just above that channel resistance, and we started to slump today. Now, what's the problem with this chart? Well, as I've explained to you guys in the past what a throw over looks like, that is when you have an upside breakout and then reversal. Now, if you have an upside breakout and then a reversal like you're seeing here, the risk is that we at least test that channel support, which would be all the way back down here around the 20, by the time we get there, about 2,800 level. And if we break below 2,800, which, sometimes those false breakouts or throwovers that we like to call them, if that's truly created, we could actually break lower too. So we talked about the risks in gold, and I think those risks in gold are still there. Now, it's not something that's going to happen over time or happen tomorrow, but maybe over time, that's the setup we've got to be looking at. I need some convincing because this has been such a strong up channel, but the technicals suggest that there are risks now for lower gold prices. One of the other things that was surprising to me this week is Bitcoin. We were looking for the Bitcoin market to break above the 200 DMA and test 90,000, right? If you remember, we were looking for that. Well, we got as high as 87,500 basically, and we fell really quick. And that was just yesterday, Thursday of this week. I'm surprised the rebound has been so shallow in Bitcoin. And I think if you own cryptocurrencies, you need to take note of what I just showed you. All right. Now, one of the other things I just want to talk to you about really quick is what's happening in well, actually two things. I want to take a look at the 10-year. You'll notice the 10-year continues to bounce off the 50% retracement. Now, this was a false breakout at one point. But what you're also going to notice, and I'll take you here to the 10-year, the ZNs that we talk about here all the time. You can see this is the same chart. We're knocking our head up against that 111.15 level, and you can see even earlier this week, I said the 10-year. This is March 19th, which was 2 days ago, and you can see the 111.15 to 111.20 level will be key resistance. We hit 111.15 as expected, and then we rejected. And if you look at live charts now, we're really struggling there. But here's the thing. If we start to break out above that 111.15, that means that we're going to have a bullish breakout. Because it's not just that level too, it's also this level as well, that level of resistance. Now, if that happens, guys, what does that mean? Well, if you have higher bond market, or in this case it'd be 10-year notes, but if you have higher fixed income, that means the dollar tends to go lower. That would mean that the euro is probably moving up back past 109 and probably closing in on 110. So keep an eye on the 10-year and the 30-year and the 5-year and the 2-year. If fixed income continues to rally and it starts to, because the pullbacks have been very minor, that could really weigh on the dollar moving forward. Like I said, last thing I wanted to cover is crude oil. Crude oil, just very, very shallow retracements. Notice that we are struggling to get over the 24% retracement. You'll see it right here, which means that the retracement is very shallow at this point. Oops. Okay. Now, if we can get above the 24% retracement, maybe we can finally get to the 50 DMA, which would be up here. If we can finally squeeze. But if we can't, then the risk is we eventually break down. But I would think that one of these two levels are going to offer levels to be on the short side of crude, or we're just going to go straight down. All right, this is the point of the video. Then I want to go over the three top trades of last week. I want to review those, and I want to give you my top 3 setups for this week as well. But as I do this, make sure that you like the video, subscribe to the channel. It's free to subscribe. It's free to like the video too. It's free also to comment down below. Let me know if there's something that I might have missed that I should be looking at, or let me know if this video really helps you. And one of the other things that you can do, I don't ask for a lot from you, especially with these free videos. But if you see us on social media, you see us on Twitter or X, or LinkedIn or something. If you can share these videos with the people that you are, that follow you, I would greatly appreciate it, and so would our team. And our team always loves it when you give us the thumbs up, because they know that their work is appreciated even when it's over the weekend, because we strive really hard to get this out to you early so you can watch this early through the weekend. So anyway, thank you for that. All right, so let's talk about the setups from last week. So first setup, Bitcoin. We were looking for a move to 90,000 to 90 to 91,000 to be on the short side. We were looking for a move to the channel. Did it happen? Never even got there. So first trade setup, it just scratch. We scratch it because we never got to the level we were looking for. So that was trade setup number 1. Trade setup number 2, short the euro yen against the trend line. This trade did not work. It didn't, and I'll show you what happened. I was looking for a move to the trend line to be on the short side. I actually lost money in that early in the week. We basically got to the trend line. We started to break above, and I said, okay, I got to take my loss. I got out of that position. And interesting thing, though, with the euro yen is we turned lower from the 78% retracement. So now that we've turned lower from the 78% retracement, I am actually still focused on this pair on the short side, although I have not been in it since I took a loss. So one trade didn't happen. The other trade was a losing trade. That happens. All right. Third trade setup, short dollar Mexican peso at the 20 to 20.04 level. Well, this trade did not work either. And I'll be the first one to tell you that I took that trade. I sold it at 220.025, I think, if I can remember the number correctly. But when it squeezed back above here, and it came back down, I just took it off for a small loss. But what I started doing is I started warning people, you know, once we did that, I'm like, I'm not comfortable being on the short side of the dollar Mexican peso. I was expecting it to move up to the 38% retracement. And as I showed you guys in the trades room, you know, I got on the short side of the dollar Mexican peso not only today, but also, you know, a couple of days ago as well. This would be from yesterday, I believe. You know, so I've been shorting the dollar Mexican peso just at higher levels. But for this video, I have to call it a loss, because it is actually not. It has gone higher since. So one trade didn't work, or one trade never happened. 2 trades didn't work. Not the best performance that I've had on the week ahead video. But you guys know, right? If you're in the trades room, I'm quite active in the markets, and you can see all my trades scrolling. So I think that'll help you out if you are actually part of the ForexAnalytix community. Now I'm going to give you my 3 top trade setups for this week. First one is the Euro Swiss. I am looking to buy the Euro Swiss on a dip to 95.20. Now I've been looking to do that for a while, but why am I going to do that? Because we have a big double bottom. Here's your neckline, and here's the correction. So I'm looking to play it back to the upside at 95.25, 95.20, and I'm looking for it to be on the long side for us to play back above 96 cents. So that's trade setup number 1. Trade setup number 2. I want to get long the euro dollar at 107.30 if possible. Now I've already explained this to you guys in long form early on, but the reason why I want to get long the US dollar or the euro dollar right down here at 107.30, it's because it is a 38% retracement, 161% extension. Actually, it's the 161% extension of this right there. So I do want to get long the euro dollar on a dip this next week. The question that I'm going to have, and probably you're going to have as well, is can we, whoops, I didn't want to do that. Let me move that back. Are we actually going to get a correction in the euro down to this level? We'll see. I'm hoping that the euro dollar will get to that level. All right, last but not least, trade setup number 3, the S&P. I believe this is a bear flag pattern, and I believe if we break below the 5,500, you have to actually chase it lower. Now, if you're already short the S&P, and it breaks below 5,500, then you're probably looking to add to shorts, because now you're going to have momentum on your side. You know, trading into a position that you're already in into momentum is usually a good thing, because then you can, like, let's say you're short here, but it starts to drop, right? Breaks through support, you short some more. Now you have double the side of the position, and then and now your stops, you can actually almost move them to break even at that point in time, and hopefully ride out an extended breakdown. I think the S&P is moving eventually to 5,100. Could it do that next week ahead of some tariff announcements at the end of the week next week? Absolutely it could. So keep your eye on the S&P. That's going to be my trade setup number 3. So if you guys haven't had a chance to try ForexAnalytix, make sure you do so. It's only $1 for 10 days to try it out. This is going to be the next 10 days is going to be a great time to be part of the ForexAnalytix community with everything that's happening with the tariffs. There's going to be a bunch of volatility, and you know the best place to be, it's right here. So thanks for listening in. My name is Blake Morrow with ForexAnalytix. Have a great day and a great weekend. I will catch you on Monday morning on the F.A.C.E show. Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.